Everybody. So we'll call to order the Finance Committee meeting of Monday, November 30th, and I will ask staff to call the roll.
Alder Bidar.
Present.
Alder Bidar is present. Alder Carter. Alder Carter.
Present.
Alder Carter is present. Alder Furman.
Present.
Alder Furman is present. Alder Kimball.
Here.
Alder Kimball is present. Alder Harrington McKinney.
Present.
Alder Harrington McKinney is here. Alder Verveer.
Here.
Mayor Rhodes Conway.
Present.
You have quorum, Mayor.
Thank you. If we can have staff read the meeting instructions, please.
Great. Welcome to our virtual meeting. If you lose connection at any point during the meeting, you can reconnect by clicking the link or calling the number in your original email. Members of the committee, if you're able, please activate your video and keep it on for the duration of the meeting. Staff, if you're able, please activate your video when you're speaking. The chair, clerk, and tech facilitator are responsible for muting and unmuting committee members. Please use the raise hand feature when you like to be recognized to speak, ask questions, or request a roll call vote. During any roll call vote, all panelists will be unmuted briefly. Staff, please use the raise hand feature when you're asked a question. The chair will do their best to call on committee members in the order in which hands are raised. Lowering your hand will take you out of the queue. Members of the public who have registered to speak, the name you entered in Zoom must match the name you entered in registration. You will remain muted until called upon. The clerk will tell you when your time is up. After speaking, a member of the body may ask you a question. If you need to share documentation with the committee, please send it to the email listed on today's agenda. Mayor, the floor is back to you.
Thank you. So we don't have any general public comment. Are there any disclosures or recusals on today's agenda? Seeing none, we'll move on to the consent agenda. I'll note that we have registrants on a few items available to answer questions. We have staff on 13 and 14. On item 25, Melissa Mulliken of Gregory Street is in support, available to answer questions representing options in community living. On item 26, we have one registrant in support, Rachel Lean of Flom Road, not wishing to speak. And then on item 27, we have Jacob Klein of South Park in support, available to answer questions representing JT Klein. And then on item 28, we have Melissa Huggins of East Johnson in support, available to answer questions representing JT Klein, and Danny Afable, perhaps, of Park Street in support, available to answer questions, also representing JT Klein. So we do not need to separate any items for public comment. We do need to separate 27 and 28 so we can go into closed session. Are there any other items that alders would like separated from the consent agenda? Alder Kimball.
Items 20 through 24, please.
So 20, 21, 22, 23, and 24.
Yep.
All right. Alder Verveer.
Thank you, Mayor. In addition to those, I have a question on agenda item number 1, please.
Item number 1. Are there any other items for separation from the consent agenda? All right, seeing none, then the items requested for separation are 1, 20, 21, 22, 23, 24, 27, and 28. Alder Carter, a motion?
I move adoption of the consent agenda.
Second.
Moved and seconded to adopt the consent agenda. Is there any objection to recording unanimous vote in favor? Seeing no objection, we'll record a unanimous vote in favor of the consent agenda and come to item number 1, which is Legistar 62966, creating sections of the MGO around the regional mixed use district. And so let's start, Alder Carter, with a motion, please.
Move adoption of item number 1.
Second.
Moved and seconded. Alder Revere, you have questions?
Yes, thank you, Mayor. There probably is a very good explanation for this that I'm just not getting, but I was curious why this zoning text amendment is on our agenda. I noticed that this is the second time this year that a zoning text amendment on our agenda. The first time I let it go and didn't ask, and it was on our consent agenda, and here we are again. There's probably a good explanation for it that I just don't see. Could someone explain why this was referred to our committee?
Laura or Dave? Let me start with you. Dave?
Thank you, Mayor. This item was incorrectly referred to the Finance Committee. It should have been referred to Plan Commission, and that was an error in Legistar at the beginning of this, of developing the legislation. So probably the best action would be to simply refer this, and then it'll need to be taken up at a future Common Council meeting to get the correct referral.
If we refer it, it will come back to us.
Well, you can refer and then place on file later. You can place on file now. So it's incorrectly before you now. So.
Mayor, if I might, since I'm still unmuted, would it be appropriate for our committee to refer to the Plan Commission for a public hearing? Or do you believe?
Alder, I'm not sure that we can refer it to the Plan Commission. I think the council has to do that. So I think I'm not sure there's a material difference between us passing it, sending it back to council, which would then refer it back to plan, or us referring it back to council, which would then refer it back to plan. So whatever the body is comfortable with, I think.
And I move that we refer it to Common Council.
Any objection to that being the motion? Is there a second?
Second.
All right, so moved and seconded to refer. Is there any further questions or discussion? Seeing none, is there any objection to recording unanimous vote in favor of referral? Seeing none, the item is referred back to council, and if staff could just make a note that the proper action of council is referral to the Plan Commission. Thank you, Alder Revere. All right, so then we'll move on to item 20, which is Legistar 61936, accepting the final report and recommendations from the Task Force on Municipal Golf in Madison Parks. Alder Carter, let's start with a motion, please.
Motion to adopt item 20.
Is there a second?
Second.
Moved and seconded to adopt. Alder Kemble.
Yes. So first, just some clarifying information about what does it mean for us to accept the report? What happens to the recommendations, to each specific recommendation? If we accept the report, are we accepting the recommendations? Are each of those recommendations going to go before another body? So if maybe Supervisor Knapp could answer those questions.
Superintendent Neff, do you want to speak to that?
Certainly. I think of the, can everyone hear me okay?
Yes.
Good. Borrowing my daughter's microphone. So of the 10 recommendations, I would say there's a couple that are effectively already in place. Those are some of the ones like working with the OJ Noor Turfgrass Institute with UW and kind of building off of it. But I'm going to take it here as the financial specifics and the big picture items, such as closing 18 holes at Yahara or an RFP for Monona. I think are the two big ones as far as changing course utilization. Those would certainly, the acceptance of a report, in my opinion, is just that the Finance Committee has accepted the report and ultimately the council would, as the Park Commission has already with this report. It doesn't adopt the recommendations. It doesn't push, it gives staff some direction on things to work towards. I will tell you right now, the staff capacity and timeline for any RFP for a change of operational model wouldn't be conceivable to be completed for the 2021 season. That's just not practicable. But on that event, like the RFP question, we would certainly draft an RFP, as is our practice with the commission. We would draft an RFP and go to the Park Commission at minimum. The last time we had this item here, Alder Verveer expressed an interest in bringing it to the Finance Committee and I think the council. And I certainly think a choice around an RFP of this significance and magnitude, I'm certainly comfortable with that. Bringing it through a process, and we have a lot of time because there's no way anything's going to change in 21. Then with hole closure at Yahara, this calls for a planful approach to that, not an operational approach. So we could operationally, and we have over the years many times because of weather, staffing, and things like that, close parts of the course for parts of the year. In fact, this last year, 2020, was the first year that I recall all 36 holes were open from the beginning to the end, the vast majority of days. In 2018 and 19, we barely ever had 36 holes operational for more than a few days. So that's operational, but in the planful approach, we would absolutely, and the recommendation here calls for us to plan for what 18 would be closed kind of permanently. And that would be a master plan amendment essentially of the course, because there's a question of what do you do with that excess land? Is it just lying fallow, and how does it integrate into the park system and future needs of the city? So those two big ones would certainly have further review and action before staff just did them. I'd have to pull up the entire report to gauge each additional one. But like I said, I do want to be clear. There are a few in there that we're already doing essentially, and the recommendations are just continue and grow that. But I think those are the two big ones, if I recall, from the last time it was here.
So my questions stem from, there's a couple items in here that are really big policy questions. And I'm wondering, where do we debate and discuss those? And the way I see it, it's the removal of the golf from the enterprise fund. And maybe we can ask Mr. Schmidtke some specific questions about that. And the privatizing operations at Monona. So, I'm just wondering, is this where we talk about that? Do we talk about it at council? Because those are issues to me that are larger than just, something that parks can deal with, that need full council debate and decisions on.
And certainly, I would definitely defer to Mr. Schmidtke as far as the detail of it, because as he's pointed out before, and I agree with him very much, the removal of the enterprise fund designation isn't really even a logical thing. What you'd be talking about is how are you subsidizing the enterprise? Mm-hmm. But that is certainly a council matter and finance committee matter, and it would need to be done through the budgeting process at some level. There's nothing that the Park Commission or the Parks Division can do to change that. And so I want to be clear about that one. I forgot that was a big one on the list. And as far as the RFP, as I said, I'm more than comfortable as we move forward and working into a work plan with even drafting an RFP of going through a more robust process than we have in the past, which would be the Park Commission review, to have a resolution to say, let's issue one, because I do understand those concerns and considerations regarding privatization and the impact that may have. But certainly Dave would be much better suited on the how you would deal with the enterprise issue, but it certainly is not a commission or division thing alone.
Well, I guess I would say, so when you're saying you would take something to the Board of Park Commissioners about the RFP, would it be like a resolution to decide to do one?
I think that would probably make more sense than investing significant resources in drafting one at this point, because part of what we would want is at the highest level, what are the parameters in that? I mean, certainly the goal, as I told the task force, the concept that a private operator is going to pay us significant resources and invest in the capital of any course is pretty low outside of the potential of Odana. But certainly we had committed to the Park Commission to bring them what I'll say is a high level before any detailed development was coming, a high level architecture of what an RFP would be looking to consider. Because we certainly don't look at this as just offloading an asset. We would be trying to find a way to meet the other goals of the report through a potential private or nonprofit relationship. And so, yeah, I'm certainly comfortable going through with if a resolution is what the body and the mayor felt was important before we'd ever issue one. I'd rather not waste time, frankly, drafting an RFP if it's not going to go anywhere.
Yeah, I would appreciate you considering that as a course of action. And then, Dave, if you could just speak to that enterprise fund designation and what would it mean, not only to, switch it on the books and how much are we going to decide to subsidize it, but what would that mean for our expenditure restraint program?
Thank you, Alder Kemble. I think the analysis that's attached to the agenda and was put together by the budget group as well as Park summarizes that quite well. There is the possibility that removing the enterprise designation, so in effect making it a part of the general fund, would increase general fund expenditures to an extent that would have to be accommodated within the expenditure restraint limit, and could crowd out other programs or make difficult decisions for you, for the mayor and the council, and how to accommodate all of that. Now, you may be able to talk with the state about that and how to accommodate something like that, but those are conversations we have not had. Now, that's the expenditure restraint effect. Really, I think I would urge you to maintain the enterprise accounting designation. This is a business activity. It has fees. And really what this comes down to is policy decisions around the extent to which there will or won't be a general fund subsidy for golf operations or golf capital expenditures. And each of those decisions can be made in the context of the budget. And we have a similar setup, for example, with Metro Transit, where we have an enterprise for Metro Transit, and the city provides a general fund subsidy to Metro Transit to help support its activities. Again, bringing it into the general fund, I think, is not a best practice from an accounting perspective, and also may raise issues around the expenditure restraint program, and really is inconsequential to the core policy issue, which is, do you want to provide a general fund subsidy to golf or not? And that's a question that could be answered during a budget process, for example.
Okay, thank you.
So are there other questions for staff? Alder Revere.
Thank you, Mayor, and thank you, Alderperson Kemble, for asking most all of my questions and Superintendent Knapp and Director Schmidtke for answering them. I did have one question that I don't think I've heard the answer to yet. Eric, if you could respond to. When this task force report was last before us almost 3 months ago here at the Finance Committee, I honestly can't remember at the time what next steps you perhaps had envisioned, and thus our decision to refer this and ask that it come back to us at a later date. Could you summarize what, if any, steps, and obviously a lot has gone on in the last 3 months, so I can appreciate if not much has happened, but can you just confirm what has happened or changed as it relates to the task force report and its recommendations since this last was before us in very early September?
Well, the most important, I think, thing that's occurred is the 2020 season is mostly now in the books. We haven't got a lot of year-end expenses that we anticipate and have a pretty good flavor on. And I can quite confidently say that on a comprehensive net income basis, 2020 will be the most successful financial year of the golf enterprise in over 20 years. Certainly driven, and I actually really, I should have led with the staff team did an amazing job. We have 7 full-time staff and a significant number of seasonal and hourly staff who make golf happen over a $3 million operation. The rounds played this year were at 134,000. That's about a 35%. We're still open, actually. 35% increase in rounds and about a 28% increase in revenue. And on a comprehensive net income basis, we will be profitable this year, the third time in 20 years and the most profit we've had in a number of years. Now, that said, that has not yet accommodated any payback to the general fund of the debt that is owed. But that news certainly put a little less time pressure on the situation, that plus the weather. And so we're looking forward to 2021, planning to operate the 4 courses at this point. And in the intervening 3 months, we had planned to work towards an RFP and trying to move along to see if potentially a transfer were possible in 2021. As I said earlier to Alder Kimball, that is no longer feasible or practicable, even with the most aggressive timeframes, and it would be irresponsible to do so, in my estimation, or try. What else we have been working on is we've continued to do outreach and try to connect to individuals who may be willing to help with strictly a donation level. It's very, very challenging to secure donations in the private marketplace, some of which is driven from the feelings of golfers that golf is treated differently and unfairly to other recreational assets. That said, I think we are relatively close in working with the Park Foundation to a potential donor to take some capital needs off our plate, and we would still own, operate all those things. Accepting a donation could occur in 2021, 2022. That's exciting news. It's not quite primetime news yet, but I think that's what we've been trying to do. We're trying to get people interested in the game of golf who want to support it, thousands of players to interconnect and try to find a different solution, because it's certainly, as Dave said, as Mr. Schmidtke said, there's a policy choice here, and it's a hard one because operationally it's a challenge, and then capital, it's 40 years of not reinvesting is coming due, and we're really just hoping for a relatively not wet spring or winter or spring. And the next steps we continue to look at, we are going to be looking at over the winter months how to reduce holes at Yahara in an intentional way, not in just a reactionary way. In the case of the demand isn't there, to try to shave costs. You see in the memo, I think, from the finance department that almost certainly closing 18 at Yahara will save some net money, but it really is very variable in how much that would be. And so in many ways, our primary goal for golf over the winter is prepare for 2021, continue to refine any COVID responses we've had, which I think is a part of the drive. Not just people wanted to golf more, but I think relative to the national market, we did better. And I think it's because our staff team did a really good job setting up a safe and secure way to golf for people, and people realized that and validated it. And tonight on the agenda, you allowed a 1-year extension of the Harris golf cars. Again, we're just kind of inching along here towards the future of golf. But honestly, we're probably really going to start thinking about the 2022 budget submission, and that's where a lot of this will come to fruition, I think.
Well, thank you. And certainly, I think most all of us were well aware that you had an unprecedented good season of golf this year. And whether it's the pandemic or Mother Nature or both, or good luck, I congratulate you and your team for proving that it can be a success and you can, pay the bills in the third quarter budget projection that we'll be, I think, discussing next. Clearly gives us the numbers and the good news there. So I do sincerely congratulate you on that, Eric. In terms of maybe just one last question, I personally have no problem whatsoever adopting the report, adopting the resolution which accepts the report, and certainly thanks the members of the task force, including Alderperson Hennick, who I see is in our meeting tonight, for their good work, and sincerely thanking them. That's all, I think very appropriate to do, is accepting receipt of the report, acknowledging the good work, etc. And I don't mean to ask you to repeat a question that Alderperson Kimball already asked and that you answered, but let's just say, for the sake of discussion, that the council does end up accepting the report, which is what this resolution calls for. And again, thanking the members for their work. Can you confirm for us, Eric, please, that none of the recommendations contained herein would be adopted or could be adopted solely by the Board of Park Commissioners? Would every one of these action items, which I think you've fully realized many of us are uncomfortable with some of these recommendations, at least I'm speaking for myself when I say that. So can you just commit and confirm to us that any of these recommendations, once the report is accepted by the Common Council, would not be fully enacted and without further approval of the Common Council, not just the Park Commission?
Eric, can you
we're not
adjust
hearing
your
you.
microphone? Maybe try unplugging it and plugging it back in. No, that did not work. Do you have a built-in microphone in your computer?
Hello?
There you go.
There you go.
Sorry about that. So unfortunately, there's a number of recommendations, Alder Revere, in the report that are, I would say, very clearly the Park Commission's purview. The integrated pest management protocols, for example, is something we've, to my knowledge, never brought to the council or other city committees. I would hope there isn't concern around promoting positive ecological outcomes at the golf courses. And like I said, some of these we're doing. On the RFP, I certainly think that is clearly something that could come to the council and finance committee, whoever else needs to see it. But I think if there's specific ones, I guess I struggle with, I can't say that none of these, some of these are already happening, and some of them are certainly the Park Commission's role, from my understanding of the commission. I think when it talks about city resources, selling parkland, request for proposals, or not selling parkland, request for proposals, and the enterprise designation, those are all very clearly, I think, financial matters that the Finance Committee and Council have a key role in. But like I said, there's, let's see, recommendation 7,
working to a specific action plan to promote equity and inclusion in all our courses. That's consistent with our parks equity team work that I guess we wouldn't anticipate bringing that to the council or body for approval. From if this were, we would continue to work on what we're doing. I guess I'm sorry, I'm a little confused as to if the expectation was each one of these would have a resolution.
So Eric, clearly if you look at the fiscal note, referring everyone to the fiscal note, it says, I'm paraphrasing here, but that there are 10 key recommendations, and then it specifically lists the 4 with the greatest fiscal impact. So clearly you've articulated that those 4 that are highlighted in the fiscal note would absolutely positively come back to this committee and the full council, correct?
That's correct.
And then if there are 6 remaining, are you saying that the 6 remaining items in your estimation are all largely non-controversial? Like, for example, pesticide management, and that the stewards of our park system on the park commission, including 2 council colleagues, can and should handle that all on their own because that's what the ordinances allow?
It would be my suggestion that the park commission has the key role in items such as that, the IPM, integrated pest management work we do across our park system. I think it would be incredibly unique to have a golf IPM strategy brought to the council or another committee.
If I may, I would, if folks are looking at the list, I would suggest that perhaps item 3, updating the mission, item 5, working with UW, item 6, working to promote positive ecological outcomes, item 7, promoting equity and inclusion, item 8, working to promote wider utilization by the community. These are all things that that seem like they really fall under the purview of the Parks Commission. They're more operational. The big questions, you know, the 1, should we provide golf? 2, should we remove the enterprise fund designation? 3, a request for proposals on Monona or Yahara Hills. 9, capital investments, and 10, selling parkland. Those are all things that would need to come to certainly the council, but likely finance as well.
Yeah, thank you, Mayor. I appreciate that. I was thinking the same thing, that often, for example, where the word work is included in these 10 recommendations, that those are all things that we could or should be doing currently in any event, as Eric's already articulated is the case. But in terms of anything that is beyond that, I think you've given your assurances, Eric, that adoption of this resolution, which accepts the report, would not in any way in your mind be seen as a green light by policymakers to adopt or move forward on any of these big recommendations. Correct?
I don't think, yes, I don't think there's any green lights in this at all.
Okay, I appreciate that. Thank you. And again, I want to thank the members of the task force for their work. Mayor, and I'll yield. I see other colleagues have questions.
Thank you, Alder. Alder Foster.
Thank you, Mayor, and thank you, Eric. My question is just really around the recommendation of the closure of the 18 holes. And as you know, this is kind of the different considerations of closures. There were a lot of different things discussed over the course of the task force work. And it seemed to me that early on, I think you tried hard to help explain that, all closing a certain number of holes isn't directly proportional to the cost of running a course. And I think really highlighted some of those kind of fixed costs, as well as I think particularly emphasized the long-term capital needs of the different courses. So in the financial analysis, as I'm reading it, it seems to kind of just use a average cost per hole for that 18 hole reduction and sort of provide some estimates based off of that. I guess my question is, in your best estimation, what are the savings that we actually expect to realize from that 18 hole closure of Yahara, and how do you expect that to impact the overall financial stability of that enterprise?
I don't think it will be the unfortunate reality, I think, of golf is almost nothing on the operational side is going to dramatically change the most significant issue, which is capital and lack of investment. And I want to be clear from the top on that. And certainly staff during the task force deliberations pushed pretty significantly that there's a scale issue. That's part of where the RFP for Monona came from, and hoping to try to find a community-based partner, a partner who wants to invest in what Monona is, which is not just a golf course, right? It's a winter cross-country skiing. It's people walking in nature and preserving that green space. We heard that loud and clear from the community. But the RFP was that was essentially towards the end, an idea that came up of, can that offload a capital and operational, site from the enterprise, both benefits. And then at Yahara, there was a lot of discussion around closing the entirety. In fact, there was at least two motions at the task force that had failed that did include closure of Yahara in total. I will say those are the last 5 of those meetings, I think, are on video, and I would encourage you to watch if you're interested. I think the argument that really moved that back from a full closure at Yahara to an 18, a stepped approach, and even acknowledged by a number of the members who voted for it, saying that may not be enough, right? The argument that really brought that to bear was the concerns around equity and access, especially for our African-American Black community. And we heard that from a task force member pretty directly. And certainly when we go through that, and I've had conversations with Mr. Steinberg and others about the concerns around Urbana and other places, and we continue to work on those issues and making it welcoming and open for all. But there's certainly a feeling in the community around that issue, and I don't want to speak too far on it, being who I am, but I've heard that. So that movement back brought it to 18. What that saves, it certainly does this. It lowers the risk, right? The biggest risk at Yahara is the 2017 or 18 example, where we invest heavily in fixed cost up front. We have a full washout for the large parts of the year, and we're bleeding red ink. And if you're only investing for 18 holes, even in that scenario, it's a little lower risk. What it also does, though, is lower your revenue potential. And so Alder Foster, and as frank as I can say, I think it will save some operationally, probably between $50,000 and $150,000 a year by closing 18 of the loss. Certainly does not make up all the expected loss we've had at Yahara over the years, and certainly lowers, an example this year being the one of the upside with having 36. And so, yeah, it was not staff's first recommendation in the task force. I think you followed it fairly well, and others probably did too, to keep all 4 sites operating as golf courses. That was not our first focus. And there's certainly a negative financial issue to that scaling, right? You don't have any step down basis from closure of a site in this scenario. But that would be my estimate. I think that's pretty consistent with early task force. We went down a lot of avenues. I think most of them ranged between closing 0, 9, and 18 at Yahara. You're within about a $100,000 band of operating loss in all 30 cases.
that's helpful. Thank you. And I guess my only other question is sort of in line with the question of sort of what happens from here. And I think you kind of explained from your perspective the answer to that. I guess just in particular around this issue, and since in some ways that recommendation for closure is perhaps a little underwhelming depending on the future conditions, and just knowing what the financial conditions were that brought us to form the task force to do, I think, some really good work. I think there's some really important decisions were made as part of that process. I'm just, I guess, anticipating that, perhaps in the future we don't have such banner years like we did this year, and we find ourselves kind of back in a similar position. And I would hate to just be caught flat-footed and say, well, do we have to start another task force, or how do we approach the questions and the decisions at that time? So I guess just, is this just going to be part of budget deliberations? Are you going to sort of take any extra steps to call this out in particular? And I guess, specifically this question of capital costs and capital costs at Yahara, that, if we're not going to invest forever in a course, I would hate to start, continue to invest in capital or start to invest in capital costs that have been deferred for so long. And then after those investments decide, we really shouldn't be in the golf game here. So I guess just anything you can offer there as to how we will make sure that we don't make those kind of investments until we're very, very confident that we are in it for the long haul.
Certainly a good question. Right now we don't have any money to invest anywhere, so that's the first assurance that we won't make that mistake. But no, in all seriousness, the steps, certainly the budget's going to be a big part of it. But we are working on trying to solve known issues at those sites. All 4 sites, there's action that does involve parks or golf resources, trying to make them a little better for whatever their use. So Monona and the Dean Avenue reconstruction, there's a need for some stormwater detention there that would help the golf course a little. Now, Monona drains pretty well, but it would certainly help the golf course or the park, whatever is there 50 years from now, right? So we're working with engineering there. That'd be a stormwater project. We hope to work with engineering in Odana in a way that would require eventually some parks or golf resources to address some of the worst 2 holes there. But there's a need as well in that area for stormwater detention, as the west side alders in the area would know for sure. And so that's a potential collaboration that would buy down that capital need you've seen printed. At Glenway, my hope is, though it's not a ton of resources needed, the course eventually will need reinvestment as a golf course. I think it does make a lot of sense to operate that course from its compact nature and really quite affordable method of maintaining. And there, we're hopeful again for some private resources we'll come back to. And then Yahara, the DOT project, the AB interchange, we're working with them closely to see if their stormwater management on the interchange at AB can be, and it looks like favorable. It can help the golf course or future park as well, or whatever the use is right through there, by reducing overland flow and stormwater spillage from the north and the east. So those are all projects that don't involve new resources. And I want to be clear, if you hear any talking about those are not parks or golf resources, and they're certainly tied towards improving the land and addressing land issues, period. That would help golf, but certainly not solve all of golf's problems. But then what are we going to do over the winter? I probably have 20 phone calls scheduled in the next month and a half with people. My push is going to be to use this task force report to show the vision of the future and try to see if we can generate private support. Like I said earlier, it's very, very challenging. I will tell you, as policymakers, as the people who have to make the decision, it is very common for people to push back on that discussion around funding support and capital of, well, why does golf pay a pilot and those things? I'm not saying we shouldn't. I'm just telling you that's what it comes down to sometimes. But I do think there's a real potential for some private support to start buying down capital at targeted courses that weren't considered for closure, i.e. Odana and Glenway. Specifically, I think Glenway is a real potential that could save the city, $500,000 to $1 million over the next 20 years. but all of those as well would come through the process of any kind of a donor agreement if they do come to fruition. And I hope that helps kind of set the table, but that's the best I have right now because I literally am struggling with what the next step is other than to wait a little bit for, unfortunately the weather shoe to drop is my fear.
That's helpful. Thanks. I think we'll just have to remember the report and the recommendations and revisit this as items come up in future budgets. Thank you.
Alder Vidar.
Thank you. I'm not seeing Eric anymore, but I hope he can hear us. So
He's still here.
Okay, good. Thank you, Eric. So my request was actually more of an organizational request. We've been talking, I think, starting with Alder Kimball, but like, what's the next step? Once the decision-making points, and then there is items that you've mentioned are directly under just the jurisdiction of the Plan Commission. So before this comes to the council, or by the time it comes to the council, are you able to like create a document that has the recommendation, whose jurisdiction is it under, and then next steps? Like, what are you thinking about next steps? Some of them that you've described, some of them it's already being implemented, but I think it would really help us really be able to understand what's next and what's the point, the times in which we need to, as the council needs to be engaged and aware of decision-making points. That makes sense? Okay.
Yes, that makes sense. Yes.
So if we accepted the report today, let's say it was council, like what would happen next? And so that's the document I'm asking for. And maybe timelines, like some of the next thing is like we won't do anything until X, we'll review it, whatever that may mean. That's some summary document.
Got you.
Well, I think between Parks and the mayor's office, we can do that.
Thank you.
And just for general reassurance, I think Eric and I haven't talked about this recently, but I think that sometime in 21, we would forward to Parks Commission, Finance, the council proposals around Monona and Yahara Hills. I think those, to Alder Foster's point, we don't want to wait until we're in a bad spot again to make some of these decisions. So I think that over the course of the next year, we are going to need to have those conversations. But nothing would happen without forwarding a resolution or the appropriate whatever piece of legislation to the council. There may be other things that move forward, but I think for sure on those two questions, we're going to need to start a more in-depth conversation. And that might also, it will certainly impact the budget process as well, let's just say.
I just want to make a correction. I move acceptance versus adoption. Thank you.
Yep. Thank you, Alder Carter. You're adopting the item that accepts the report. It's a convoluted motion, perhaps. All right. Are there any other questions for staff? Seeing none, is there any discussion? All right, the motion is to adopt the acceptance of the report. Is there any objection to recording unanimous vote in favor? All right, seeing no objection, the report is accepted. And we'll move on to item 21, which is the third quarter projections. Laura, do you have a presentation for us on this?
I do. Get things queued up here. Okay, great. So tonight I'm here to brief you all on the third quarter projections for the current year's budget that will end at the end of December. So this slide that you're looking at here sort of shows how our quarterly projections have changed going back to the first quarter. So if we're looking just at the third quarter, you're wanting to focus on these columns here in the green. And what we're projecting is that the general fund will realize $328.6 million in revenue this year, compared to expenditures of $334.5 million, which means that our expenditures are going to be $5.8 million than projected revenue. So within this $5.8 million, 1.2 million of that is related to a surplus in the library fund. And because of how the library fund is structured, that full surplus is restricted for library only purposes, which means that the general fund is essentially projecting about a $7.1 million shortfall. If you compare that back looking at the second quarter, we were projecting about a $12.3 million shortfall. And that's where we're getting the change of about 5.2 million. So essentially the outlook for the current year has improved, but we continue to project a deficit. So the big changes between the second and the third quarter are broken out down below here. So first of all, the outlook of general fund revenue has worsened compared to the outlook at the second quarter. This is specifically driven by the room tax and investment earnings. Additionally, police and fire spending is projected to be $2.6 million higher than it was at the second quarter. This is largely driven by overtime spending. Collectively, the two departments are projecting a $4.5 million shortfall, and of that, $3.5 million is related to overtime. And then finally, the biggest driver in the change between the second and third quarters is related to another item on your agenda tonight, which impacts Metro's 2020 general fund subsidy. And so the third quarter projection assumes that the general fund would provide Metro with none of its subsidy in 2020, which is $8.5 million, and that Metro would make up the loss of that subsidy through applying a portion of its CARES Act that was awarded earlier this year. So if we break these numbers apart in a little bit more detail, we'll start off by talking about general fund revenues. So as I mentioned, the outlook for general fund revenue got worse between the second and the third quarter projections. So collectively, we're projecting, overall, we're projecting about a $12.1 million deficit on the revenue side. Now, property tax and state aid, those two portions of revenue make up about 85% of all total general fund revenue. And we're projecting that we'll realize about $273 million from those sources. So pretty much at budget. The real driver of the deficit is being caused by the remaining 15% of our budgeted revenue, which is coming from things like room tax, income and investment income, and then parking violations. So you can see for room tax, we're actually projecting that the general fund will not receive any of its share of room tax revenue in 2020. So that will be a $5.9 million deficit. Investment income is projected to result in a $2.5 million deficit. The third quarter projection is based off of actual revenues we've received year to date and assumes no additional revenue from this source. And then finally, parking violations are projecting about a $2.8 million deficit, and that's about $500,000 lower than the third quarter. And you can see that monthly revenue from this source is about 30% of what it was based off of the prior 3-year average. So essentially, this loss of general fund revenue means that a portion of the general fund balance will be applied to absorb the projected level of expenditures. And so what that means is that based off of these numbers, the unrestricted fund balance, or the rainy day fund, will be approximately $51 million, or about 15.5%. But as you all recall, the 2021 budget that you all just adopted assumes that we'll use $8 million of fund balance in next year, which means that at the end of 2021, if all things play out just like they are in the budget, the unrestricted fund balance will be at about 12.7%. So switching gears now to expenditures, throughout the year, this year I've been showing you what expenditures have looked like in the current year compared to prior years. And so if you're looking at this chart up here, you can see the red bar here is 2020. And then the other bars are the prior 3 years. And so you can see in the first and second quarters, our spending in 2020 was actually slightly lower than 2019. That trend has reversed in the third quarter, where we saw third quarter expenditures higher than the prior 3 years. And if you look down below, you can see that the October spending was significantly higher than 2017 through 2019. So we're continuing to monitor what is sort of driving that uptick in expenditures. It is important to note that these October expenditures are not part of what I'm presenting to you here today, because our analysis here is based off of actual expenditures that were incurred before September 30th. So what I'm going to do now is walk you through agency budgets where there were major swings between the second and third quarters. So the first agency is the clerk's office. So the clerk's office is projecting a $60,000 surplus, which is an improvement of $1.4 million from the second quarter. Now, the biggest change there is that when we were doing the second quarter projections, we did not know about the grant revenue that the clerk's office was going to receive, or that the clerk's office has received, to help offset increased election costs during the pandemic. So we've factored in that total grant award, which is just over $1.4 million, which is now helping to contribute to the surplus. So at the second quarter, we had to make some assumptions about the August and November elections. So we were projecting in the second quarter that those elections would cost about $1 million per election. Based off of the third quarter actuals, that came in at about $950,000. So we were pretty close there. But it is important to note that that's almost double what that same election cost 2 years ago in 2018. And the chart that you see here down below really demonstrates sort of the increased election costs that we have seen in 2020, especially when you compare it back to a similar year in 2018. What you're seeing here in October, that increase, that's really picking up the bulk of the postage costs that the city incurred as part of the absentee voting. One thing I will note in regards to the November costs, that does not pick up all of the payroll costs that were incurred as part of the general election. So that November number will actually go up a little bit. So moving on now to the fire department. The fire department is projecting about a $945,000 deficit, which is about $400,000 higher than where we expected at the second quarter. The big driver of the change here is overtime spending. So at the second quarter, we were projecting overtime would come in at the end of the year at 1.4 million. It's actually trending to be closer to 1.7 million. And really what that's driven by is higher need for overtime to meet the daily minimum staffing levels that are required to operate all of the stations. Now, if you look at what that how that compares to 2019. This chart here is showing you the monthly overtime numbers in 2020 versus 2019. And you can see from January through June, it was very equal month over month. In 2020, or starting in July, the 2020 numbers were slightly lower, but we are anticipating that there will be that end of the year spike. The other thing that has helped in the fire department is that revenue is projected to come in higher than what we were anticipating at the second quarter. This is driven mostly by the change regarding some restricted revenue from elevator permits, so that improved the revenue outlook, along with realizing a portion of the special duty revenue that we receive from supporting UW football. So moving on now to the police department. So police is projected to have a $3.9 million deficit at the end of the year. That's up from $2.2 million that we were projecting at the second quarter. Again, the big driver of the change here is from overtime spending. And you can see the same chart here in the police department comparing 2020 overtime to 2019. You can see the spikes in June, which is sort of the first round of unrest that we saw. And then you see the increases again in September and October. So the demand on overtime is driven not only by the by COVID costs and responding to unrest, but there's also been additional overtime associated with the homicides that have happened in the community and additional shots fired incidents. In the streets division, we're projecting a $220,000 surplus, which is a $360,000 increase from the second quarter. And the major change in the streets division is attributed to how we're projecting fourth quarter snow and ice. So in the second quarter, we were assuming that there would be 3 general plow events in the fourth quarter that the city would have to respond to. We've actually decreased that projection to 2, just given the fact that in recent years, we've only seen 1 general plow event happen in the fourth quarter. So similar to the clerk's office expenditures, here you see the spending on snow and ice by year and by month. And so you can see in general throughout the year, the 2020 actuals have been lower than the prior years. Now moving on to the Parks Division. So the Parks Division is projected to have a $32,000 deficit, which is up by 41,000 from the second quarter. Really what's happening in the Parks Division is we are projecting revenue loss driven by the dramatic drop off in charge for services from things like facility rental, admissions, park use charges. We're also, the drop off in revenue also assumes eliminating any room tax contribution for a portion of the Olbrich expenses. But the loss in revenue in the Parks Division is almost entirely offset by personnel savings. So the department currently has 10 vacant positions that are projected to continue through the bulk of the fourth quarter. There were also significant savings that were realized from lower than prior years seasonal staffing levels. Parks also benefited from having redeployed staff from other city departments to help make their seasonal staffing models work. And then finally, the library is projected to have a $1.2 million surplus. That's consistent with the second quarter. That is much higher than prior year surplus levels that we've seen for the library. And as I was mentioning earlier, any surplus that is remaining at the end of the year within the library fund remains within the library fund to be used for a future year. Again, in the 2021 budget that was just adopted, we've assumed applying $250,000 in fund balance next year to cover library costs. Almost all of the surplus that we're seeing here at the library is driven by vacant positions. So the library currently has just over 12 vacant positions. There is some level of filling those positions, but there will still be a considerable number of vacant positions as we move through the rest of the year. Now, switching gears and looking at the enterprise agencies. So as a whole, the enterprise agencies are projected to have about a $5 million deficit. That is pretty much driven by room tax in Monona Terrace, Metro, which will be utilizing a portion of its CARES Act funding, and then the parking utility from the dramatic drop off in revenue and parking. Now, the deficit in these funds has actually decreased by about $7 million between the second quarters. And some of the drivers there, specifically in the parking utility, the outlook there has improved by about $5.2 million. And that has to do with applying revenue from the air rights sale associated with the Wilson Street garage that was realized and applied during the third quarter. The major utility funds, so sewer, storm, and water, are collectively projecting a $4.4 million surplus. The major drivers in sewer and storm are that those utilities are not anticipated to dip into their contingencies that they have budgeted for 2020. Again, the water utility continues to see the benefit of the rate increase that went into effect earlier, or that previously went into effect. And then public health is projecting a $9.1 million surplus. Now, this is driven by all of the grant revenue that public health has received relating to the COVID response. So essentially what's happening in public health is that they've received, a host of funding through the county and through various state sources. And what that means is that public health will not need to utilize very much of its general or county subsidies that will be transferred to public health this year. And so what that means is that any of those remaining balances will just lapse to public health fund balance for a future year's use. And then finally, in Monona Terrace, they are projected to have about a $2.6 million deficit this year, which is about a $300,000 change from the second quarter. The one thing that is important to know about Monona Terrace is that as of the third quarter, Monona Terrace has exhausted all of its remaining fund balance, which is why the general fund is projected to receive none of its share of the room tax revenues from 2020. So based off of all of this analysis, the next three items on your agenda tonight are sort of year-end budget repair bills to help ensure that we end the year in balance. So this slide really attempts to sort of explain what all of these year-end actions are doing. So in the year-end resolution itself, we are proposing to appropriate $950,000 from the city's unrestricted fund balance. So this will ensure that the 2020 budget grows by the maximum level allowed under the expenditure restraint program so that we don't lose that allowable growth. That $950,000 will be appropriated to the contingent reserve so it can be transferred out to some of these agency budgets. As I previously mentioned, we're also proposing to eliminate the 2020 subsidy to Metro Transit and replace that with a share of the CARES Act award that Metro received earlier this year. So based off of those changes, the contingent reserve would increase by about $9.5 million, bringing the total contingent reserve to $11.2 million. Then within the year-end resolution, we're proposing a total of $5.9 million of transfer out to agency budgets to offset different deficits. So these deficits are in fire and police, based off of the overtime spending that I previously described, $1.2 million in direct appropriations for redeployed time. So that's where staff from different agencies were deployed to or redeployed for other purposes. This is largely parking utility and Monona Terrace staff being sent to other general fund agencies to support their staffing models. Traffic engineering is projected to end the year with a $140,000 deficit. That's primarily driven by not realizing all of the budgeted revenue within the department's budget. And then there's a variety of smaller transfers that are described in the year-end resolution that total $86,000. So based off of that, the ending balance for the contingent reserve will be $5.3 million. And so essentially what that means is that expenditures will still exceed the amount of projected revenue. So what we're doing here is we're making sure that agency budgets are being increased based off of any projected deficits, but overall expenditures are still going to be higher than what we're projecting for 2020 revenues. So just a couple of other notes on the year-end actions. So in addition to what I've just described there, we're proposing about $575,000 of intra-agency transfers. So that's where we're moving appropriation across different categories within agency budgets. These are just based off of projections within those agency budgets and are not projected to have an impact on the overall budget. We're also proposing to appropriate $1.87 million from enterprise fund balance. This is in the fleet division that requires additional funding for interest expenditures, and in the parking utility that requires additional fund balance to offset the lost revenue. And then finally, the last piece of this is the Routes to Recovery program. So the city was awarded $4.1 million through that funding source to reimburse ourselves for costs that were associated with our COVID response. Again, these, since it is a reimbursement, that revenue will be applied to direct appropriations to sort of offset these expenditures that have already incurred. The other piece of good news here is that the state earlier this month did allow cities to submit additional applications for funding that was above and beyond their initial allocation. So the resolution does allow the city to accept up to $3.3 million of additional funding that's not reflected here. And if we were to receive that, finance would be able to apply those funds in the 2020 budget and then report back to the council about how those funds were applied. And then finally, as I mentioned, Legislative File 62987 appropriates a portion of Metro's CARES Act award in 2020. So the resolution proposes appropriating $11.6 million from this funding source. And what that does is it offsets the loss of the general fund subsidy for the current year. And then it also offsets additional lost revenue from the fare box in Metro. So that was a lot of information. So I can now try to answer any questions that you all might have.
Alder Furman.
Thank you, Mayor. Thank you, Laura, for that ton of information. Not only is it a lot of information, but I'm very appreciative of all the different things you guys were able to figure out to get through, obviously very difficult times. I'm curious about the room tax deficit. I see there's a deficit, and you talked about it a little bit. I know there were changes earlier in the year to those contracts. And I didn't see how we're actually filling those deficits. I know, I understand there are deficits to the city not getting certain money, and we have to fix that for the stuff that the room tax was funding for the city. But what about the other things that room tax was funding? Is that still outstanding items, or is what happened earlier in the year kind of fix that?
Dave, do you want to speak to that?
Sure can. Thanks, Laura. Thanks, Alder Furman. So really what you're seeing in the what Laura presented is the shortfall in the room tax fund based on third quarter room tax collections, which are projected to fall short of the projections that were made back in July, and upon which the Room Tax Commission made its decisions about the amounts of reductions to Destination Madison, Overture, Winona Terrace, and so on. So really that no funding, no room tax going to the general fund is really to retain all of the remaining room tax, all the room tax that'll be received in 2020 in the room tax fund in order to fund that level of expenditure that was approved by the Room Tax Commission back in July.
Okay, so the city won't be receiving money from room tax revenue, but Destination Madison, for example, will be receiving, and there's enough money for them to continue to receive what was agreed upon back in July, is what you're saying? Is that...
It'll be very close, but that's the estimate right now, yes.
Okay, thank you. I appreciate the clarification.
Yep.
Thank you, Alder Verveer. Sorry, Alder. There you go.
That's okay. Thank you, Mayor, and thank you, Laura, for your excellent and thorough presentation as always. I don't have many questions. You'll be happy to hear, and I especially know that all of the city staff that are here for these items will be happy to hear that I don't have questions of them at this point, I don't think, but I do really want to acknowledge, Mayor, that so many agencies are here, both the leadership and budget contacts I see are here in this meeting, in case any of us do have questions about the year-end resolution and this briefing. So Laura, for you, my first, perhaps, well, I hope they're both, I think they're all easy questions, but anyway, the first question is, in terms of the redeployed employees, as you pointed out, many of whom come from Winona Terrace and the parking utility, that $1.2 million that's contained in the year-end resolution, does that mean that every single solitary redeployed city employee is being covered by this year-end resolution from the unrestricted fund balance, or did any agencies actually assume any costs, absorb any of the costs within their appropriation?
Yeah, great question. So early in our response to the pandemic, when we started to redeploy staff, we set up a project to track those expenses. And so the $1.2 million that's reflected here is for all of the staff time that was charged using that project. So if, so I guess I can't say every single hour because it's every single hour that was charged to that project. And so what that means is that any of that staff time is being funded by the general fund rather than that employee's home fund or home base rather.
That makes sense. Thank you. And then generally, and I kind of promised I wasn't going to ask this of the agencies that are present tonight, namely fire and police department. But again, I know they're here. We could ask them to weigh in if they're interested. But in your professional estimation, Laura, would you say that the overtime issues for police and fire this year that you project or that you've already realized are largely unprecedented because of the pandemic and the civil unrest? Or do you believe that, is it fair to say that I don't want to put words in your mouth, but that a decent portion of the overtime issues in those two agencies are just the ongoing issues that we are all familiar with from the last few years?
Yeah. You know, I would definitely encourage colleagues in police and fire to chime in, but I will say it does appear that they are sort of being hit from multiple fronts in terms of meeting the demands of their daily minimum staffing. So certainly, you know, during periods over the summer, there was just additional need for staff to meet the demands of their service. And as what we've seen is, as the year has gone on, and as you know, the pandemic has raged on in our community, that the rank and file of those departments are now impacted by COVID. And so, especially in the case of the fire department, you see large numbers of staff either testing positive or being exposed that have had to miss shifts, which result in callback. And so that definitely is something that is unprecedented and due to the pandemic, and not something that we would expect to see year over year.
Thank you. That makes sense, and that was my assumption as well. The last thing I wanted to ask you about is the Roots to Recovery program. And obviously you've already explained it well to us, as does the resolution before us. But I wanted to ask you specifically what your level of confidence is. I can say this too with your future colleagues at DOA as you depart the city, in terms of whether or not you believe that we absolutely will be receiving this $3.3 million of eligible costs that we recently submitted to them. Is there a very high level of confidence that we should receive that money?
So regarding the nature of expenditures, they qualify under what DOA has said is an allowable expense. So from that perspective, my confidence level is high. In regards to you know, whether or not the state will be able to accommodate that request, I don't have that information. It appears as though Dave looks like he would like to say something.
I don't know if I have much to add to it, other than the indications we've gotten is only about half of that original 200 million that was allocated has actually been dispersed. Now that has probably declined since I last heard that amount, but the indication that we've gotten is that there's considerable balances left. Now, that's up to the state if they want to allocate it further or if they want to allocate it to other purposes, but they are under that time pressure to use it all by the end of the year.
Thank you. That certainly does sound encouraging on both of your responses. That kind of, when you remind us that the CARES Act money as of today still has to be expended by the end of this calendar year, Dave or Laura, the recent application that I think you've already made, that you're not about to make, but that you made for that additional $3.3 million of eligible costs, is that what's the timeline of that $3.3 million of eligible costs? Is that take us through December 31st? Those are projections through the end of this year on our part that are COVID related, or are they the end of the third quarter, or what exactly calendar was used for that?
So those are expenditures that the city's already incurred. And so because we already incurred those, they would meet the time, the December 1st or December 31st cutoff date.
And so would that be through them the third quarter, Lori, that application was, or?
So the expenditure, so the 4.1 million that we submitted, that was part of an application that was submitted back in September. So those were expenditures that we had incurred through, I want to say August. And so the addition, but we had expenditures that were higher than the $4.1 million that we were allotted. And then we've continued to incur additional expenses. So again, all of these are previously incurred expenses, which means that they would meet the timeliness requirement of the funding source.
Yeah, just to piggyback on what Laura said, the state allowed expenditures through November 17th. So accounting staff pulled together as much of the costs as they could that had been incurred through that date. In addition to, as Laura said, those costs that we did not seek reimbursement for, but that would be eligible.
Thank you. So then there is a potential possibility, if we remain optimistic, that they might even come back with another round of opportunity for us for the costs in the month of December and a couple weeks in November.
I think that's remote. They don't have enough time to turn this all around. So
I see. Okay. Yeah. And so then lastly here, given that level of confidence with the additional Roots to Recovery program funds, are you highly confident that we won't need to use the $2.9 million from the unrestricted fund balance that is allowed in the year-end resolution that we'll be voting on in a moment?
Yeah, I mean, if that last wave of funding comes in, then we're essentially at, we've pretty much come in at budget. So, I think the other thing to keep in mind is, the revenue projections are incredibly conservative. And so, a couple of things could break different ways, and that revenue number could come out stronger than what we're presenting for you here tonight.
Thank you. Thank you both very much. Thank you, Mayor.
Thank you, Alder. Or, the projections could go the other way, as they did between the second and third quarters, just saying. Alder Carter, you had a question.
Yeah, Laura, when you look at the fire department one more time,
Mm-hmm.
and you said there was a deficit of 944,000 approximately. So it looks like when I look at this chart, it looks like the only time we were sporadically over 2019. Can you tell me what has changed in the basically from October to November, because it went down so far?
So the November amount that you're seeing on that chart only included half of, or one payroll in the month of November. And okay. So after the next payroll is applied, I would assume that you would see that number go up closer to what we saw previously. Mm-hmm. I mean, I think although the trends have been the same, it's important to note that there was a deficit in overtime spending in 2019 as well. Okay. So the 2020 budget made some changes in terms of assuming that some staff working a 40-hour work week would go back into the shift model, and that has happened. But we continue to see this ongoing overtime deficit that we had thought would be lower in 2020, really due to the pressures on their staffing model that are caused by the pandemic.
Okay, thank you very much.
Thank you, Alder. Alder Harrington McKinney.
Thank you, Madam Mayor. The two alders have answered a few questions on my checklist, but I would like to speak to Acting Chief Wall and Chief Davis, because we've talked about the projected overtime, And I know Laura has been officially speaking on that, but I see both of them on. I'd like for you to speak to the projected overtime because you're seeing and probably have a better projection of what that staffing level would look like. And I'd like to hear you speak on it, please.
Oh, sorry, Chief, you should be able to unmute yourself.
Chief Wall, I'll go first if it's all right, because I'm probably shorter than you for a response. But as you saw from Laura's numbers, in 2020, we were clipping right along, staying under budget and we started to get some community spread in our stations with COVID. And so our numbers went through the roof in October. In fact, from about March 15th to October 2nd, we had only 9 people in the organization that had tested positive for COVID. Today, we're up right around 46 or 47. And so we worked with public health on a pretty aggressive plan to stop community spread in the stations, which led us in the month of October to quarantining those that were exposed for 14 days. Even though as healthcare workers in the EMS field were exempt, we thought it was the safest bet for our folks. So we created this 14-day quarantine, which led to 15 to 20 overtimes a day in some weeks. And so we realized pretty quick that the budget wouldn't be able to hold that model. So we went back with public health and redesigned a shorter quarantine time with more testing. And that seems to have worked and panned out. And so like the county and the state, just general residents, we saw that same spike in October and November. Now, today I'm happy to report that I think we have 1 COVID positive person in quarantine. That was as of noon today. And everybody else is available. So our staffing model is right now, this week, is back to some normalcy where we haven't seen these huge amounts of overtime needed.
As far as MPD is concerned, it's really been sort of a combination of not only COVID, but the unrest and the gun violence over the year that have all been very significant. In fact, I think certainly the unrest has been the biggest dollar amount piece of it. But even generally, our major case overtime is trending higher than prior years. We haven't had quite the same issues with COVID as fire just because of different work environment, but I think we're probably in the mid-30s now for how many employees we've had test positive, and that in combination with the unrest and the gun violence and the staffing demands that those things in combination have put on us have really resulted in the overtime. But go back to, I think, Alder Revere's earlier question is certainly my hope that this is unprecedented and that we won't have this sort of combination of events at any point next year in the future that create this kind of strain again, because it's been a challenge, not just financially, but just as a practical matter of keeping our beat staffed on a daily basis.
So I have a follow-up question that I'll put out and both of you might want to answer it. I noted that there were 4 areas that Laura mentioned in terms of the overtime. And she, of course, said the pandemic, the unrest, the homicides, and the shots fired. So those are the 4 that she listed. Also, I've been looking at the town of Madison and when that comes online. So would that be a 5th area that will drive overtime? So I'm putting that out, and I'd like for both of you to speak to that, please.
Well, I'll let Chief Davis speak first on the town, because we're in different places with sort of how that's progressing.
Yep. So, Alder, if you'll remember, November 1st, we started to serve the town residents with fire and EMS. Our data, if we were to do operational planning off the first month, I'd say we need to add probably an engine and an ambulance. But the data right now has been pretty busy in the town of Madison, busier than we anticipated. Based on the data that they had given us. And so I'd like to just cautiously give it some more time and address it probably in the 2022 budget, whatever resources the fire department may need. Once it comes over, I think that we'll be okay. And it could be just a fluke in data right now for a response, but it is not, the town of Madison coming on board has not created any overtime issues for us in fire.
Okay. And you'll be tracking those occurrences closely.
Yeah, we're watching it very, very closely, the data. Right now, the data that they gave us, they showed 1 to 2 calls of service daily. But we're seeing closer to 6 to 7 calls for service daily. So I don't know if it's just the time of year or it's a kind of a fluke thing, but we are watching it very close.
Okay, thank you.
And so we've done an analysis of the town workload and their calls for service and compared it with our workload. And so that analysis suggests that we should add 13 positions to account for the extra workload that the town of Madison is going to bring. Now, obviously, we haven't realized any of that workload. Their police department's still functioning. They're still taking calls. So it hasn't had any impact on us at this point. But I think early next year is when it will become, I should say early 2022 is when it will become an issue. This agreement will take effect in October of that year, but I think we will have to take over policing in early 2022. Just they will not be able to sustain policing, I suspect, and we will have to have their staff available to help with the mechanics of the transition, the evidence, the reports, the open cases, those sorts of things. So it'll be something that we will definitely have to account for early in 2022, one way or another, either through staffing or through overtime.
Thank you both.
I have a question for Chief Wall and Chief Davis. Chief Wall, are there current dialogues with the town of Madison? I believe Chief Gregory is still the chief regarding their data and calls for service.
Well, we've been having regular meetings, not only with Chief Gregory, but with Chief Brecklin from Fitchburg, because of course, part of the town will be going to Fitchburg.
Yeah.
And trying to sort of align what our plan, or we anticipate our plan will be for the transition. So we've been having regular meetings with them. I don't know that we have updated the data recently. We actually share a records management system with them. So a lot of the data we just have access to ourselves.
Okay. Okay, thank you. And Chief Davis, just got a quick question for you. Is some of the calls for service that you're seeing the increase from the town of Madison is COVID related, or, this is a very stressful time. So I would be thinking that more people would be calling for your service than maybe compared to last year, quite frankly.
Yeah, and that's a really good question. And so far, the data, until this recent spike in October, November, our actual call volume was down a little bit around EMS-related calls for sick people, but our structure fire call volume was up. And we attribute that to people, are at home more. They're cooking at home more. Cooking fires are still the leading cause in the city for structure fires. So we have to dig into the town data to see what it is and where it's coming from. I suspect, without really doing a deep dive, is there's probably some neighborhoods that require more EMS intervention than others. And so, that's part of what we need to look at in the coming months. But with that said, our call volume for sick people is up now, October, November. And just anecdotally, something that the reports don't show and the numbers show are the patient interactions. And when you talk to the paramedics about what they're seeing, I think they're seeing a lot more fear than they were earlier in the year. Like people are calling 911 and want to get in the medical system sooner. And maybe they don't necessarily need to, but they want that medical intervention because of the symptoms they're having. And so in talking to some of the paramedics, they're seeing more patients that are less sick and more fearful, if that makes sense.
Yes, it does. Thank you very much.
Thank you, Alder Kimball.
Yes, Laura or Dave, could you talk about the drop in investment revenue and why you expect none in the fourth quarter? And do we expect a loss? And if so, how much?
So investment income is down just because overall, the investment climate, the economy overall, what the Fed has done to drive down interest rates is having an effect on the city's interest or investment earnings in the same way. So it's sort of the correlate to the fact that we're able to borrow money at very low rates. If you recall, back in September, we issued debt and we're able to borrow at 0.8% for a true interest cost. So those are unprecedented rates. So that's also affecting earnings of our investment of our cash. And we expect for the whole year, we'll probably have about 1.3 million, 1.5 million of earnings, with most of that coming in the first quarter of this year, pre-pandemic. There probably will be some money that comes in, but it'll be minimal over the next, over the final quarter. So we won't have we don't ever go negative, if that's what you mean, but we're, compared to what we forecast for 2020, which I think was around $4 million, we're going to be down closer to about 1.5 million. And that situation, I think we built in about $1 million of earnings for 2021. And if past is prologue from the Great Recession, we will remain at that level for several years.
Okay, thanks. And then could you or maybe Justin explain about the overall pot of the 24 million in CARES Act funding to Metro, and how the decision was made to allocate the amount that is being made today, and why is that being made in December, and how much, if any, can carry over till next year, and what's the plans for that?
So in regards to the timing, doing the budget amendment correlates when we have the most complete information about what the projected revenue shortfall would be for Metro. So we're based off of this resolution, we'll be appropriating just over $11 million of that award. In the 2021 adopted budget, we're appropriating 3.1 million, which still leaves a remaining balance that can be either utilized in the 2022 budget or potentially for capital purchases in Metro's capital improvement plan.
For 2021?
Or 2022. There's beyond the the share that's included in the adopted budget, the $3.1 million. Nothing else from CARES Act is currently appropriated in the 2021 budget.
And do you expect the contribution from the general fund next year to be offset by that by the CARES Act funding?
So the 2021 budget holds Metro's general fund subsidy as at the base level that was included in the 2021 in the 2020 adopted budget. So in the 2021 adopted budget, Metro will receive $8.5 million next year from the general fund, which is consistent with what was budgeted for 2020.
So if there are more COVID-related losses next year, would we bring a budget amendment to allocate more than that?
For sure. Yep.
Okay.
So we could either apply, you all could either apply additional remaining balances from the CARES Act funding, or, I mean, the other option would be another funding source, which would likely have to be the general fund.
Okay, thank you.
Alder Verveer.
Thank you, Mayor, and thanks to Alder Kimball for raising the issue about the $24.5 million CARES Act appropriation to Metro Transit. I did neglect to ask one of the questions I had intended to about that. So just to clarify, Laura, the overly generous news that I think you just shared with us, it's your understanding that the FTA is, or what's required by Congress in that appropriation, the FTA is extremely flexible in how we can spend that money at Metro Transit. So you said it could be both operating or capital, and it doesn't even have to be expended next year. It could even be expended anytime in 2022. Did I hear you correctly?
That's the plan, is that we could allocate the funds over multiple years, and yes, they could be used for operating or capital purchases. I would defer to Metro staff to answer any sort of more specific questions about what was actually included in the application to FTA for this funding source.
Thank you. Justin or Wayne, could you fill us in?
Justin is here.
Yep. Yeah. So Laura's right. We do have the flexibility to use these funds in more generous ways than we've had in the past with our regular formula funding. So, yeah, the intent is to basically pay for our expenses from the capital or from this CARES Act money in an amount that is equal to the loss of the general fund subsidy. And there is no time limit on the funds. They're kind of used, or we have them until they're expended. Obviously, there is, just like with our other funds, there's no official time clock. But if we go years and years without drawing on any of the funds, then they'll start to ask a lot of questions and potentially try to claw those back. But if it extends for 2 or 3 or 4 years, that's not really a big deal.
Thank you, Justin. Then out of further curiosity, did we actually receive the full payment at this point, or is it something that is reimbursable and requires regular applications to actually receive the disbursements?
So these are reimbursable funds. So we have to target specific expenditures for these funds, make those payments, and then request reimbursement from the FTA for that amount. So we would have to designate some amount of existing expenditures as the money that we're using, or the expenditures we're using the CARES money for. And then once that money has been spent, then we would get reimbursed for it.
Thank you. I appreciate that. Thanks for clarifying. Thanks, Mayor.
Thank you, Alder. Are there other alders with questions on this item? All right, seeing none. Thank you, Laura, for presenting that. And we'll move on to item number 22, which is Legistar 62985, amending the 2020 adopted operating budget. Alder Carter, a motion, please.
Move adoption of item 22.
Second.
Moved and seconded to adopt item 22. We essentially just discussed this, but are there questions, additional questions for staff on this item? Or is there discussion? Seeing none, is there any objection to recording a unanimous vote in favor of item 22? Seeing no objection, item 22 is adopted. We'll move on to item 23, which is Legistar 62986, amending the 2020 adopted budget to accept and appropriate the routes to recovery funds. Alder Carter.
Move adoption of item 23.
Second.
Moved and seconded to adopt item 23. Are there questions for staff? Or is there discussion? Seeing neither, is there any objection to recording unanimous vote in favor of item 23? Seeing no objection, we'll record a unanimous vote in favor of item 23. Move on to item 24, Legistar 62987, which amends the 2020 operating budget to appropriate CARES Act funds received by Metro. Are there questions? Alder Carter, a motion.
Move adoption of item 24.
Second.
Moved and seconded. Are there questions for staff? Or is there discussion? Seeing neither, is there any objection to recording unanimous vote in favor of item 24? Seeing no objection, we'll record a unanimous vote. And that will take us to item 27 in our closed session. I will note that we have, again, one person registered on item 27. Are there any questions for Jacob Klein, representing JT Klein Company, who is in support and available to answer questions? Seeing no questions, then we are going to go into closed session now. And before we do, let me first clarify that in addition to the members of the Finance Committee, other members of the council are welcome to stay with us. I see that Mr. Wachter is here. Matt, do you want to identify which staff should stay? And then we'll let the rest of the staff go because items 27 and 28 should involve the same staff.
Yes, so staff would be Dan Rolfs, Jim O'Keefe, Joe Gramacki, Kevin Ramakrishna, Lynette Rhodes. Sorry, people are jumping around on me. Matt Miklajeski. I believe that's it.
Right. I hope our tech facilitators got that. And then for the public, I'll just ask our tech facilitators to go over again how we're going to accomplish the closed session.
Yep. Thank you, Mayor. So what we are going to do is we're going to ask everybody who Matt did not just name to jump off the meeting. So that would be any staff as well as public. You can leave the meeting, and then what we're going to do is we're going to lock the meeting after the tech facilitators leave, myself and Jesse. And then Laura is going to lock the meeting so that nobody can join the meeting. We're also going to pause the live stream so that there's no audio or video in the live stream. So I would just ask at this time, anyone who Matt listed off, please stay. Anyone who Matt did not list off, please leave the meeting at this time. And it looks like
Stefan, we need to actually make the motion to go into closed session. So before you stop things, let's do that. Alder Carter.
Yes, I move to go into closed session.
You need to read the notice.
Oh, I didn't even see it. Okay. Okay, here we go. When the Finance Committee considers the following matter, it may go into closed session pursuant to Section 19.85, subsection 1, subsection E, Wisconsin Stats, which reads as following. Deliberating or negotiating the purchase of public properties, the investing of public funds, or conducting other specified public business whenever competitive or bargaining reasons require a closed session. If the Finance Committee goes into closed session, notice is hereby given pursuant to Section 19.85, subsection 2, Wisconsin Stats, that it may reconvene in open session without waiting 12 hours as specified in the statute. I move to go into closed session.
Second.
Moved and seconded. This is a roll call vote. So all those in favor of going into closed session, aye. Those opposed, no. As your name is called, and I'll ask Laura to call the roll.
Bidar?
Aye.
Bidar is aye. Carter?
Aye.
Carter votes aye. Furman?
Aye.
Furman votes aye. Kimball?
Aye.
Kimball votes aye. Harrington McKinney?
Aye.
Harrington McKinney votes aye. Verveer?
Aye.
Verveer votes aye. Mayor, you have 6 ayes on the item.
Right, so we will move now into closed session and ask staff to depart, and then Laura will lock the meeting, and Laura, you will let us know when we're clear.
All good.
And we're streaming again?
Yeah, let me just verify that our streaming is back up. All right, and we're back up. So we're ready to roll.
Thank you. So the report out of closed session is that the Finance Committee discussed the current status of negotiations and the issues at hand, and directed staff to keep negotiating. And so that dispenses with item number 27. We'll move on to item number 28, which is Legistar 62977, which is authorizing a change in the proposed unit mix at JT Klein Company's Westgate Commons development. And we have 2 registrants available, both in support, available for questions, both representing JT Klein, Melissa Huggins and Danny Afable, I'm not sure how to pronounce that last name. And I see neither of them in the room, but Mr. Klein is here. So are there questions for him? Or is there any desire to wait to see if we get our registrants back? Seeing none, then Alder Carter, let's get a motion, please.
I move adoption of item 28.
Is there a second? Moved and seconded to adopt item 28. Are there any questions for staff? Is there any discussion? All right, seeing none, then is there any objection to recording unanimous vote in favor of item 28? Seeing no objection, we're recording unanimous vote in favor of item 28. And that brings us to adjournment. And before I ask for a motion, I'd like to ask that the motion to adjourn today be made in honor of Laura Larson. This is her final Finance Committee, as she is leaving us for the state. I'm not bitter in the least. Tomorrow is her last day. And so I just want to say, Laura, thank you for all of your work with the Finance Committee. And we all wish you the best going forward, and we hope that you will not be a stranger. And I hope you see the virtual round of applause that you're getting on the Zooms here. So that said, in honor of Laura Larson, a motion to adjourn. Oh, wait, Alder Verveer wishes to speak. Alder Verveer.
Thank you very much, Mayor. I just can't let this moment go by, even though I know I already did my best to embarrass Laura in the middle of the night when we were adopting our 2021 budget a few weeks ago. I won't repeat what I think I said that night, but Laura, you have just been amazing. I can't say good things about the tremendous legacy that you leave us in terms of the data-driven and evidence-based budgeting that you brought to us. Your legacy will continue, I know, for a long time. You've really done so much as our budget and program evaluation manager, more than you probably will ever realize. So I just want to say personally, once again, what a privilege it's been to work with you over these, I guess, 5+ years now that it's been, and really thank you personally for all the service that you've certainly brought to our community, but to us, especially on the Finance Committee over those years. You've been such an excellent staff to this committee. You've put up with us and the long nights, and you really will be missed, sincerely missed. And I certainly wish you best of luck on behalf of all of us as you move on to your state service. Thanks for everything.
Thank you, Alder. All right, now a motion to adjourn.
Move adjournment.
Second.
Moved and seconded to adjourn. One more time in honor of Laura Larson. Is there any objection to recording unanimous vote in favor? Seeing no objection, we stand adjourned. Thank you all. Have a good night.